Welcome to part two of TradeTheMBI's nightly video report. I wanted to go in depth on some of our trades that we had made from the previous week, and it was a good opportunity to just spotlight them. Now, for SSO, we could briefly covered it. We'd sold the 55 puts, got about 48 cents for them, so that gave us a cost basis around 54.50. That was fine. If we do get a nice gap up, which is kind of the expectation based on what we were seeing, we want to look to get at least 80 cents for the week, particularly it's a short week with Thanksgiving, so that would be the plan there. Moving on to USO, we did, you know what, I can put up our website because I went and blocked the malware that was in there, so no issues going to it, but we did both, sold weekly calls as well as the puts. Could not have finished better. I don't know that you can get any closer to being right on the money. If you traded out and let the 32s expires and bought back your puts, fine. If you did not, it just leaves you free to sell calls on those additional shares put. We would want to sell them on, we have the 600, we would want to go ahead and sell 600 if you got put the additional 300 at 900. So that would be the plan, but that was an excellent return, and once I'm able to go back to the site, I'll adjust those numbers because that will lower overall cost basis dramatically overall. So that one turned out about as near perfect as you could hope for. CLF, right along with it, that was pretty darn close as well. CLF, we'd sold the 36 puts. We got about 85 cents, giving us about a 35.15 cost basis. So anything over 35.15 was going to be a bonus. We wanted to turn around and sell the 34 puts to get at least 70 cents for those. It would have been very easy to do that. And finish right above the middle of it, so that was fine as well. Now for CLF, I would look to sell the 36 calls if you can get approximately 70 cents or better. So you want to look for 70 cents for CLF for the 36 calls for the week of Thanksgiving. Again, you know, still showing some express weakness there overall. We're just still looking for a return back to the upside on our extreme histogram. Red line, should get rid of it because it just represents a little segment. I'm not sure where all those little segments. Oh, it's a drawing object for one of the studies I was doing. That's what it is. It represents the bottom and top ranges for this, so that's why I can't get rid of that one. That's okay. Just didn't want it to obscure the line. The real red line for the extreme histogram is down here. So we are making a lower low on higher extreme histogram so far. We just need to turn that around a little bit to the upside. So X was another one that we nailed right on the money, pretty much. We had sold, well, let's put it up here so we can take a look at it. X, here it is. We sold the 20 for 17 cents and it was very close, almost finished right at it, and we wanted to look based on last night's video to sell the 20 again, and easily could have gotten 40 cents, roughly about 42 cents for selling that put for next week. And some people say, well, why do we want to do that? Well, we got a orange dot had developed in between there. We're coming off a GAM. Sure, we understand that there could be a little bit more, but within our expectation to acquire more, and then, I mean, if we'd been put these shares, we were just going to turn around and sell the call anyway. So unfortunately, we didn't quite get those. Fine, we'll go ahead and sell puts again, and we'll do it all over again. Piece of cake. We love those kinds of setups, so that went beautifully. WLT was probably the only not so perfect setup. Let's see what we had done here for WLT. We had sold the 3250s, got about 85 cents. Obviously, we finished well below there, down at 29. So that was much lower than overall expected, but that's okay. We wanted to turn around and sell the 2750s, and probably get about 48 cents for those 2750s. Only want to sell a 3250 call if we can get you know, a decent return on it. So that would have to be up there a little bit. We'll probably have to evaluate that during the week to see if we get any kind of bounce off of it per se. But overall, not surprising from what we're seeing from here. We knew we were so deep below this move below the red line. I mean, in fact, even on the lower price, still an improvement, down to negative 84. That's shocking, though, that the shakeout here is only at negative 18. I would have expected it to be a bit deeper than that, but, you know, that just indicates that perhaps it's a little bit more weekend selling than some people want to imagine. And that's, fine. We're just going to keep adding to our portfolio and set ourselves up for potential year-end. Obviously, doesn't look all that great at the interim. I mean, sure, we expect a little short-term bounce, but we know that we may have to revisit those lows, in which case we'll probably be looking to sell some more calls in that in between if there's any pops that still show us to be under some weakness. And we'll collect our returns that way. No issue with it whatsoever. Gold looking attractive as well, so don't want to underestimate that one. And you know what? I thought I was doing the Apple chart for us. Let's see if I can click over fast enough and get that to pop up. Oh, you know what I have already on there? BA, because we talked about it from the green dot, and kind of hovering flat even despite the market weakness, staying pretty close to that overall zero line. But if we do take a look at Apple real quick, it was kind of interesting because within this overall downslope, negative 36 on the shakeout. Now that is real selling. That lets you know that, all the way back from when we first, had the initial expanded ratio histogram signal there, which was the short SI, and then turning red trend, it just, you had your brief opportunities, coming back off the green dots, tried to get back to there, and then it's just, then you end up with the red dot with the number, and then boom, collapse. And then this was earnings. You can see they all lined up for earnings. We could see them. And when it disappointed, it was like, okay, we had the opportunity to get out, did, and it just kept going south from that particular point. And no new buy signals or anything from the overall setup otherwise, but hopefully I'm going to be feeling a little better. We'll be able to get a little more advanced with some studies and get the website back together from this malware attack. I understand it took out quite a few sites. The SiteWalk people that handle cleaning everything and that were saying that they're inundated. So it must have been someone's idea of a fun prank. Kind of stupid, but what can you do? As always, though, trade well.